Hey traders, welcome to this week's Daily Sharp with COT Data Insights. I'm Phil Morse, and in this video, I'll break down the key market setups I'm watching based on the CFTC positioning data, macro catalyst, and price action. If you're following my newsletter, this will bring it all together visually. Let's get into it. Alright, so last week was an interesting market, but yet very quiet. We had a very bullish return on the Nasdaq. On Monday, it shifted the tone of the market completely. We were calling for a bearish scenario intraday, and we had just two opportunities for shorts. That was on Tuesday and on Thursday, but overall, the week was overly bullish. And for the following week, well, most of the things that comes to mind is what we have in the calendar. In the calendar, we have very interesting news, fundamental news coming up, which is the CPI on Tuesday, and we have the PPI on Thursday, as well as the retail sales on Friday. So these are the main catalysts to shift the market next week. According to the positioning, we have Nasdaq at 86,000, which is one of the highest, the 3-month high for now. And well, I don't like being long in environments where we have extreme levels. However, because we have fundamental news coming up, doesn't matter, just flow along together with the news. That would be the best way to trade the market. So how the probabilities for the rate cut are being priced in will drive how the indices should react. So that's for last week. We had very bullish shift on Wednesday, and that should just give us more upside pressure. Secondly, the VIX. I have been very interested to go back and study what we see on the VIX, and for the VIX there have been very, very interesting things, right? I have not done this. This is the first time I'm reviewing the VIX, but from the positioning of the VIX, we can see here in the month of June, starting on the 17th of June, after we turned bullish on the S&P 500. Now, how do we make sense of this? Now, we can see we have extreme levels of bullishness on the non-commercial side as compared to what we see on the short side of the commercials. Now, when we see the non-commercial at extreme levels, we actually want to see the opposite happen, because we know that the commercials are positioned the other way around. And in this kind of extreme situation here, we see perpetual increase and maximum amount of longs in the month of June going forward, and that was what propelled the VIX lower, because the big boys were positioned counterwise, and also we have extreme levels of open interest. So when we have very high level of open interest, that will trigger market to poise lower, right? So we don't want to be long a particular asset at extreme levels of open interest. So having seen the open interest increased consistently, that's also going to be a tell sign for the VIX to go lower. Apart from that, also the net positioning. The more positive the net positioning is, that's going to drive the VIX lower. Can we take a visual view of what the VIX looks like? Yeah, so this was the VIX. Let's look for the weekly chart. So we see that since June the 23rd, as you can see indicated here, we see the extreme levels of longs by the non-commercials, and we expect the commercials to take the opposite side. That was the bearish catalyst for the VIX to go lower, and that was what supported the indices price to go higher. Now, do we know that there is a turn right now or not? For now, the VIX continues to go lower, right? And until we see sustained shift in the opposite direction, what do we want to see for us to get the VIX to turn around? We want to see that the net positioning begins to go negative. So the more negative the net positioning, the bullish the VIX. So we want to see a consistent drop in the net positioning of the VIX, right, in the side of the commercials, to tell us that we are going to have a turn. But for now, we still keep counting. Next week is all about the CPI and PPI, so nothing to really take much about, just to sit down and observe the tone of the change. Now, this week, one of the tone of the change that we can see is the fact that we have the 1-year all-time high in the commitment of the commercials versus the 1-year all-time high short positioning by the non-commercials. And like I said, if you're trying to call out a momentous move, you have to get yourself the commercials, and you have to wait for that positioning to be validated. And that's the important thing you can see on the VIX here. So I guess we are looking towards September, I think September 10, September 15, around that range. interestingly enough, this coincide with the rate cut decision that's going to be happening. So we'll see how the market is going to respond to that. Secondly, the dollar. For the dollar, we had an interesting week. Last week it was very cold. We highlighted the fact that because of the very negative NFP print on August 1, that is sufficient price action to let the market digest that information. So there's not going to be any rapid reaction, but a sustained cooling. Ever since the entire week, we didn't have any major, apart from the drop on Wednesday, but apart from that, everything is intact. We simply have just come back to the equilibrium of the price range. So yeah, price has come to the equilibrium level of the range that was created from July. And we can see price at the OT level, close to the OT level. We want to see how price reverses from this level. It will be interesting to watch and see how this all plays out. Most importantly for next week again, the fundamental news are the main driver. Yes, we are bullish on the Dixie. However, if the CPI print come out surprisingly bearish for the dollar, then you just follow along with the news, right? There's no need to fight the data print. But again, it remains bullish for us. This is because we see a consistent bullish positioning by the commercials. This is a show of their commitment to see how far they want to push price higher. And we would just wait for the fundamental news to play their course. We don't know how they're going to go until they print out. So I've been consistently talking about the DXY since June, so that's of no real impact to us. Secondly is the yen, right? So in the report for this week, we just came out with a pure report instead of coming out with the COT data because it's consistently telling us that the net positioning of the commercials are going lower. So the lower those contracts, the higher price, and that's what we see for JPY. These highs are of interest, right? So we want to see if the news coming out next week will be sufficient catalyst to reach those levels or not, right? Again, how those news come out will determine the path. There's no hard balls. We spoke about last week the fact that there's a possibility that maybe we could sweep this equal low instead before we go higher. Again, let's see how that plays out, depending on how the news comes out. Now for the GBP, it's an interesting one for us last week that we were watching. This was because we were thinking more about a potential short squeeze scenario which would drive the Euro GBP pair lower. This is because we have seen the fact that in the month and the date 22nd of July, we saw that we were at the extreme bullish positioning, right, which caused a flip in the long and short positioning of the commercial, because I think a shift from 49,000 to 67,000 is a whooping 20,000 new contract. So that was a lot, about 18k, about 18k difference, and that was enough to know that sentiment is changing, and not necessarily against GBP USD, not against the dollar, but rather against the euro, and that was how we began being careful of how the position is going to be moving forward. And since the 28th, I think that was during the, the tariff negotiations between Euro and the US, it caused this shift lower. However, we were calling all of this a toppling process. And on Thursday last week, we had the hawkish rate cut from the GBP, and that was the cement for us to know that we are going lower. And not just that, but the evidence that we see here from the data, which is the fact that we see 3 weeks of consecutive extreme commitment to the short side of the non-commercial. Again, when we're calling a mega move, we want to see that we are on side with the commercials, and we can see that the commercials are already stacking up in the opposite direction. So this is a good recipe for us to see sustained price going lower. Now we just want to wait and see when these shorts are going to be squeezed out. The moment these shorts get squeezed out, this is going to cause the Euro GBP to continue falling lower. And lastly, I believe it has to do with the silver. Yep. Now for silver, we had good reasons to expect lower prices last week because of the fact that we saw that the non-commercials were still interested in the long side, and we were saying we only remain we only remain bearish on the silver until they take off those long commitments, and that's what we see exactly on for this week data print. So for this week data print, we can see that they have removed over 10k, and again, it's no more red. As far as no more red means they've cooled off. And one of the interesting things that we were watching for last week was that upon Tuesday close, we wanted to see if there was going to be sufficient reason for us to continue lower. So we wanted to see a displacement lower. And Wednesday close, we didn't see that. Thursday also, we didn't see that. So that was sufficient reason for us to just like stay on the sideline and do nothing for last week. And that was for silver. This new week, we are going into the pair that starts from the analysis. The pair that stands out to me is still the Euro GBP. It has the cleanest bias for me, while for the dollar, it has to do with how the CPI, PPI, and the retail sales comes out. So it's going to be purely intraday week to be in tune with the market. So let's watch out for what the VIX does over the coming weeks, and also be in tune with the news that are coming out. The catalyst on Tuesday we have the CPI, on Thursday we have the PPI, and on Friday we have the retail sales week. So good luck to everyone, and let's see how it all plays out. That's my brief from the newsletter. That's it for this week's COT Outlook. If you found this helpful, like and subscribe. Drop a comment if you're watching any of this setup too. If you want to dive deeper, the full write-up is in my Substack. Link in the description. Stay nimble, stay sharp. See you next week.